So today's talk, I actually want to break up into a few smaller pieces and tackle each mini topic amongst the larger topic. And what is that larger topic? Well, yesterday I wrote an article about, and I'm going to show you that article right now. Here we go. Titled, Be Wary of Trend Transitions and the Confusion That Accompany Them. So the reason I wrote this, it's completely coming from the Euro-US dollar and the daily chart, and why once a dominant trend has been broken, and I will get into how I define broken and gauge momentum and sentiment, but once we determine that that trend has been broken, I want to be cautious, first of all, of something that I've observed over the years that seems to be commonplace, which is that if for whatever reason an uptrend transitions out of the uptrend and begins to lose that bullish sentiment and momentum, people automatically, too often and too many people automatically start thinking that it's a downtrend and that they must now be bears. And in the case of the Euro-US dollar, the trend has been down, and we're definitely pushing the boundaries of what I would define as an intact downtrend. But that does not make me now a Euro-US dollar bull. This automatic switch from, okay, I can no longer be bearish, so I must be bullish, is just a huge error, because studying Charles Dow, there are indeed 4 market trends, which are reflective of 4 different psychologies in the market. Of course, we have the uptrend and the downtrend. If you want to boil those down to greed and fear, respectively, that's totally cool. We also have sideways market trends, accumulation and distribution. The difference between the two is the trading range and the volatility. Identifying which is which makes a huge difference, because in a lot of sideways ranges, some traders will play breakouts and breakdowns through support and resistance, but in a distribution range, and this is a little different because I'm going to talk about a distribution range at the end of a downtrend on this chart, but it also could be the end of an uptrend on the other half of the pair. So don't get confused by, if you are already familiar with distribution, don't get trapped by thinking the only definition is that of the end of an uptrend and the volatility that follows. Remember, when we're trading pairs, there is an uptrend that's ending when we look at distribution at the bottom of the chart that has been heading lower. Okay, I hope that wasn't too confusing, but what I really want you to take away from this is that there are sideways ranges that we must respect. And accumulation is when we have a quieter, less volatile, less narrow trading range. In fact, things looked almost bored, or they look like they're waiting on something. There's a certain anticipation quality to it. People really aren't willing to stick their necks out, and therefore the market becomes very quiet. If we had volume, and when I'm trading futures or stocks, I look at the accompanying volume to drop. I don't really look at volume for the Forex side of things. What we do have, I believe, is distribution, and that's going to be wider ranging, much more volatile, less predictable levels of ceilings and floors. And what accompanies that is a range that's going to bounce around because it lacks the organization of sentiment and momentum to move up higher or lower. So as I continued on in this article yesterday, one of the things that I mentioned as I wrapped things up was that my expectation was going to be we'll scroll down here, was that I felt there was still a lot of selling pressure, even though we had broken the 34-period EMA high, which I'll show you in just a moment. There's a lot of selling pressure between 3050 and 3200. Yes, a wide 150-point range, but for a daily time frame, not all that much. We'll take a look at that too. And the distinct possibility that we're going to chop around between the 50-period SMA close and that recent low that we made a handful of days ago I believe that would have been a low from, thinking back, I think it was probably the 13th, the low from the 13th. I'm not really 100% sure on the date, but I'm sure on the price that we were going to chop around in that area, which makes for a very wide range.